Thank you everyone for joining. We'll just wait a couple of minutes for everyone to join. السلام عليكم. إن شاء الله أنتم طيبين كويسين. حنبدأ إن شاء الله البانل دي لليلة. البانل حتكون بالإنجليزي and translation بالعربي برضه حتكون متوفرة إن شاء الله على التيم. So my name is Ahmed Elmurtada. I'm a managing partner of 249 Startups. I'm responsible of the investment and funds. And I'm very delighted to have with me today a great panelist from all over the place with different experiences. We'll just we'll mention the name of the panelist for now. And when we start the Q&As, we will be asking them to briefly as well introduce themselves. We'll be having here Mohamed Eisa from the IFC, Sufyan Bayram from Blackbox, Mohamed Elmalik from Antler, and Karima Hakim from Plug and Play. To start this panel and give a context to what this panel is going to be about before we get into the questions. We'll be doing 1 hour into the panel, and then 30 minutes for Q&As from the attendees. So please feel free to drop your questions on the Q&A section. The name of the panel, the name of the panel here that we are starting is Building Bridges, Investments and Collaborations. And starting from Sudan. Sudan is, even prior to the conflict that happened, was home to 1 million refugees, making it the second highest refugee population in Africa. Since the start of the conflict, 8.5 million people in Sudan got displaced within Sudan, and another 3 million got displaced to neighboring countries, from Egypt to South Sudan to Chad to the GCC, Ethiopia, etc. And we are doing this panel under a more positive note, trying to look into how Sudanese entrepreneurs and investors can make a positive impact on their industries or countries that they are in. Under the theme of Global Entrepreneurship Week of Sudan, Entrepreneurship for Everyone. And then it's just about that this slogan is not only about building businesses or solving challenges. It's also remind us with the inclusivity of the Sudanese entrepreneurs that they are not only like, building their businesses, but they are also fighting poverty, unemployment, famine, and striving for a brighter, resilient future. So today we'll be exploring these cross-border investments and collaboration, and what does that mean for Sudanese founders or investors trying to plug into the MENA region and Africa. So let's get started, and I will start with a quick intro, and I will ask my fellow panelists to briefly introduce themselves, and then we'll get into the questions. Maybe we'll start with you, Mohamed Eisa, and then we go to Ahmed, Karima, and then Mohamed Elmalik.
Sure. First of all, thanks, Ahmed, for inviting me. I want to first thank you for all the work you've done for Sudan. I know you've been at this for a number of years, supporting startups in Sudan with not just funding, but capacity building in terms of knowledge sharing, educating startups about how to approach investors, how to structure a deal. So I just wanted to say thank you and acknowledge you for the role that you have played and continue to play. I'm Mohamed Eisa. I'm the global head for venture capital for IFC. IFC is the largest DFI, development finance organization. We invest in emerging markets, specifically to help entrepreneurs at every stage of the startup formation all the way towards exit. Thank you.
Hi, everyone. Thanks, Ahmed, for joining, and thanks all for joining us and all the team of 249 Startups. My name is Ahmed. I'm originally Syrian. I'm currently working as a GP for Blackbox. We are Silicon Valley-based accelerator programs helping non-Americans founders to come to explore the Valley in the residential experience 2 weeks. We help more than about 400 founders from more than 72 countries who can have to grow and make a great success. Previously, I was the regional manager for Techstars in Europe, Middle East, and Africa, and published a few books on refugees entrepreneurship and also entrepreneurship in conflict settings. So probably this is my area that can help and support the community. I had the pleasure to participate in the first Entrepreneurship Week Sudan in 2015, and I'm glad to be back again to talk to the founders as well. Thanks.
السلام عليكم. بس الحتة دي هقولها بالعربي عشان أنا بجد متشرفة إني أكون بكلمكم النهاردة يعني بصفتي كحد يعني بشتغل في بيئة ريادة الأعمال، بس برضو كمصرية، وأتمنى ليكوا ولأهاليكوا وللسودان الشقيقة يعني كل خير إن شاء الله يا رب. وعايزة أقول لكم إن مصر منورة بنوركم، يعني لو أنتوا ضيوفنا أو جيتوا لنا قبل كده، فقلت أقول يعني سريعا الكلمتين دول. I'm the country director of Plug and Play, which is a leader in venture investments. So it's a global VC headquartered in Silicon Valley. I'm their country director in Egypt, but I also oversee their investments across the African continent. Plug and Play has been investing across the world. We have a multitude of portfolio companies, but we also run enablement programs for founders in partnership with corporate partners, but also government partners. And actually here in Egypt, we're running a very large smart cities program, and we're open for any company, startup that has a stake into the Egyptian market to come look into it. يعني فإن شاء الله نسمع أكتر من المواضيع دي. شكرا.
Salam. Mohamed Elmalik. I'm an investor at Antler, which is a global day zero investor. The way we work is perhaps a little bit unique in that we look for founders. We look for people at the very early stages of their journeys who join what we call a residency. It's effectively a 10-week program in which you're able to find a co-founder, validate your idea, and get an initial check from Antler to start building. And we found that founders across the world face a lot of the issues that we try and solve. The most critical of which is probably finding the right team. From there, really having kind of the right idea and the right business model that you're tackling to start scaling. And then beyond that, obviously cash is important as well, but also beyond that, kind of a network to continue to build. So these are our kind of core tenants, Singapore-based initially. And I sit in the MENAP fund, so we cover everything from Morocco on the west to Pakistan on the east, and everything in between. I'm calling in from Riyadh today. I was raised in Doha, but originally from Sudan. Very honored to be here, and thanks Ahmed for organizing, and of course for all the great work that you do to kind of be one of the key enablers in Sudan for entrepreneurship. So excited for the conversation.
Yes, thank you so much, everyone. I will start with you, Ahmed Elmalik. So you did indeed mention that Antler is a zero-day investor, right? And currently, within your work with Antler, you look for founders all the way from Morocco to Pakistan. Maybe let's start with Saudi Arabia and the current basically growth in venture capital. Recent research has been mentioning that $1.5 billion in venture capital funding came into the region, specifically from Saudi Arabia, with hosting a couple of unicorns as well. I would ask the question from a perspective of you as a Sudanese professional within this industry. When you look back to Sudanese led startups, give it be in Sudan trying to scale or to join company programs like Antler, or already Sudanese in the diaspora, part of a teams, how you would usually assess these companies when you look into investments? What type of exactly investment is that Antler look for these founders per se? It could be, of course, it's a general thing, but if we were able as well to highlight main pain points that Sudanese entrepreneurs able to work on, what that would be.
It's good. We're starting strong. I like this as a first question. I think, look, this is the $1 million question. How can you tell if a company or a founder is going to be successful? I think for us, because we are founder first, we really assess you as an individual founder or as a potential co-founder. So what that means is, on a broad scale, we are industry agnostic, and we don't necessarily have a preference for a specific kind of business model or a specific vertical for you to tackle. We are as you mentioned, investing in Saudi, investing in UAE, but also investing in all the other countries in MENA and GCC in Pakistan. And we think there's a ton of opportunities in a lot of different verticals. So because we invest so early, it's really, it's a little bit moot for us to overly constrict the types of things that we invest in. So our primary kind of guiding North Star is this a founder that can build a gigantic company? And what that means is usually, we look for 3 or 4 things. And these, you can ask anyone from Paul Graham to Mohamed Elmalik, and they'll probably tell you very similar traits. First and foremost is this someone who is uncomfortably ambitious? Have you, always pursued things that very high goals and achieved them? Is this someone who is execution oriented? Or in other words, will run through walls to execute, right? So founders, more than anyone, know the pain of rejection, people quitting, investors saying no 100 times over. Are you someone who can withstand that and actually thrive in that environment? Third is kind of like an obsession. So are you either with a problem, a space, an approach? Are you someone who day in, day out is able to focus on a specific thing and continue to pursue that regardless of anything? And then fourth, this one's a bit tricky. We call it first principles thinking, right? So it's not really a measure of how intelligent you are, it's more of how do you tackle problems, right? So maybe for the lack of a better example, when you think of SpaceX, I think Elon Musk probably thought, okay, look, if we want to go to space on a regular basis, it's a little bit expensive. So that's kind of the headline. What does that mean in terms of like the underlying issues? And a lot of it is cost, right? So it's cost prohibitive to go to space. So first principle thinking effectively means that you're able to break down very large problems into the subset of problems and tackle them in a tractable way. Because again, if you are going to build a venture-backed business, you're not going to have all the answers on day one. And you're probably going to be going after a space that is A, big, B, competitive, C, complex, right? So like these 3 things together mean that you need to be able to see the forest through the trees, right? So like kind of quiet down the noise, break things down into their core components and tackle them one at a time. So in the case of Elon Musk, it's probably, the kind of rocket propellers that, once you go into space, single use rockets are probably the thing that's driving up costs. Okay, so how can we think about multi-use, bringing these rockets back into the stratosphere, solid state motors that are maybe a little bit more cost effective. So like, what is the big problem? What are the sub parts of that problem? And how can we tackle that from 0 all the way to 1? So like, these are probably the 4 things that we look at for every single founder. And then within a founding team, we look for cohesion. So like, does everyone else bring something complementary to the table? And is this a team that has maybe the right approach, the right skill set, the right subject matter expertise to tackle the space? Because when you come into the residency at Antler, you probably don't have a fully baked idea and probably don't have even as much as an MVP, right? So it's really, we focus on how much you're able to execute, whether you have the right skill set and whether you have the right mindset to actually tackle this problem. So I think the second part of the question was about like, how can founders kind of tackle some of these pain points, right? And I think, yeah, at the end of the day, it's really about probably picking the right problem is really where you should start. So, and that's oftentimes what, like the lean startup approach is about, is like validating that a problem is real, that many people face this problem, and then thinking about the solution, right? So like, think about the solution first, or like, okay, I want to build an app. That you're already off to a bad start, right? You should say like, what is a problem that a lot of people face that I think I have the right skill set for, or the right kind of curiosity about to tackle. So I'd say always focus on the problem, focus on validating that the problem exists, and then go and chase after it and stop at no cost, right? Obviously, there's a trade-off there where you're like, okay, at what point should you stop and like realize that there's no problem here? But maybe that's a conversation for another day. I think I answered all the questions, sub
Yes.
questions, but let me know if I
No,
did.
no, indeed. No, indeed. Thank you so much, Mohammed. And Antler is, of course, an opportunity that's ongoing on cohort basis. As Mohammed mentioned, there is the Riyadh program and others. The residency you spend, and we definitely got to know about a couple of Sudanese that made it to Antler in the previous cohorts. So wherever it open, it definitely these are good points to take. From that, I will go back into history and also to Ahmed Sufyan. So Ahmed, you did mention at the beginning you are in Sudan indeed, maybe 9 years ago, right? 2015, and during that time you were there, right? You were there when even a well-known Sudanese startups companies, ride-hailing like Mishwar and Tirhal, were pitching their very first ideas on stage, and you did, you were part of at least some feedback points at the time. Today, going forward, and just prior to the conflict in Sudan, that emerged even more investment rounds started to come in. Kashi secured $5 million dollar investment, and then there was Bloom that joined YC, and then raised 6.5 million, and so the ecosystem started to grow. So I think reflecting on that point and coming to Ahmed, basically, of today, with all your experiences in Syria and the MENA region, how does all these experiences in Sudan, outside Sudan, also within your time with Techstars, how did shape your approach in general in investing in fragile context and the type of investments and founders you are currently look at with Blackbox?
Yeah, thanks, Ahmed. Absolutely, that's like the natural kind of progress of founders and for entrepreneurs, and you see them more like resilience and try to find and hack solutions for the problems they are facing. The ecosystem and then was like very like early, but it was a lot of people passionate about entrepreneurship. I remember we get pitched from people who are like 14 years old till like 65 years old. Like a farmer who interested in having agri-tech technology and the startups. The thing is, when you try to build your startups, mostly in the MENA region, what is still to a certain extent, it's growing ecosystem still back then was like immature, and then you see them more like growing. And the founders that been in Sudan or in Syria and some of the places in our region, they mostly work with the constraints, and there's a lot of obstacles in front of them. So like insecurity and stability, lack of financial support that you're having, limited access to market, increasing financial burdens to many of them every single day, and therefore customers as well. So whenever they have price for something, they need to change it and adapt to the market, currency depreciation to a certain extent. So that's why many of the people we see, they are forced to build lean startups, adaptive, resilient solutions, and try to get themselves to build the infrastructure that some other founders around the world maybe don't have to do it. And I remember Terhalo was like trying to hack the financial system by using mobile units as a payment system, and that's become like a very famous payment system and a way to trade off payment or get cash there, or get deliveries more of the community and recruiting the people. And that's lead us to very fundamental I think common principle that I see it with many of the founders in similar settings, that many of them are not just looking to become, we talked about Elon Musk, which just not to become the next Elon Musk, not to become the next Mark Zuckerberg, not to become a billionaire. It's a more like a survival game for many of them. This is like a winning or losing, where you have a high unemployment rate. It's very hard to find a job. Either you need to leave your country, or you want to find a solution for the problems, as you cannot also rely on many institutional or governments to fix your own problems. So you want to step up. And then we see a lot of local people try to establish that infrastructure for them, which is the first generation of founders. And then the second generations build on what's already been before, and the practices that then become more common to direct it to something else. And then you see what you said about Kashi and Bloom, and getting more like interest and more resilient solutions and deeper in the ecosystem that could be attractive to global venture capitals like the YC, Visa, Visa Venture, PayPal Venture also, I think, was part of those kind of deals. And you see, sadly, there was like a setback, but I think the principle and characteristics that have been built before that's still common among many of the founders. And that's what we need to like bet on and yeah, go to the founders themselves, how is it and what they are doing, get those founders like more into this untapped potential that we have. There's an opportunities when you work in such a market as well. Competition is not very strong. If existed, the market is very hungry on all those solutions and been waiting for them. So the adaptation of customers, you see it in a larger basis and higher than actual market. Recruiting talents where it could be very challenging in a different markets would be found easier with a lower kind of average salary base, so that can help you to recruit some of the talents. And those are the kind of advantages. Yet if we're going to start talk about also obstacles on the other side, we mentioned some of them, the infrastructure, the banking system. That makes many of the startups in the similar settings, according to very old study that I did, have like their launch phase, it takes them more time than let's say a startup that working now in Riyadh or in Dubai. So they needed more time, and that's why we talk to investors to be more like it's a patient money, more focus, more resilience on the founders, high pivot rate in a comparison to different markets as many challenges comes in. That's more like that's there, but I want to just finish with this is not unique to the Sudani market. And what I've seen there, I also saw it in many places around the world, in Africa and also in Asia, here in Europe, also in East Europe, or a smaller ecosystem. There's a different challenges, but many similarity between the characteristic of the founders themselves.
Thank you so much, Ahmed, for this. And yeah, indeed, as you mentioned, each country has its own challenges, and Sudan is definitely not unique alone. There is also other similar contexts that are fragile, that are also affected by conflict or even post-conflict. I'll go from you to Karima and reflecting on two main points linked to Sudan in your experiences before. So Kashi today as a fintech startup, when investment happened from Fawri and other investors before, you were part of that experience with Fawri. I would love to hear your thoughts on that and what you saw with the team at that time. And the importance of that, because today, even mid the war in Sudan, we are seeing Kashi basically providing a lifeline for people in sending money between and etc. And this is, I think, the disruption that startups that are working in risky markets actually able to work with the innovation model that they have. So yeah, I just want to take your mind in a bit of a couple of years back. What you have seen in Kashi at that time within the investment round that happened, and what you basically also your reflection on the market in general within Egypt, and other Egypt being also a big country in terms of venture capital.
طبعا. Thank you for this question. And just to برضو put it into context, I used to run the corporate venture capital for Fawri right before I joined Plug and Play. So it was the Kashi deal actually was my first ever as a person professional, yani international non-Egyptian investment deal. So I led this one and I'll forever actually keep it as a great learning experience because أولا just to برضو give you context, Fawri is publicly traded, so you can always see all the news, anything on our portfolio if you're ever curious. But Fawri would only invest in businesses that are ancillary or really strongly connected to its core business. Fawri is not a VC. Fawri, as you mentioned, is a big fintech traded with a lot of, let's say, leadership in the market. The investments are not from a fund perspective. They're not for quick exits or very unstrategic direct investments. That being said, the team of Kashi, برضو worth putting it into context, is also the team that is behind the platform Al-Souk. So again, it's a team that is experienced in marketplaces, understanding merchants, e-commerce. You do not create a Kashi from thin air like this without the adequate understanding of the market. وطبعا the team being mixed between business people, but also technology professionals was very important to note. The deal was one of Sudan's first big VC rounds. Again, we were very proud of this and still very, very proud investors in Fawri, in Kashi, and I speak on behalf of Fawri even to date, because I'm still very close to the CEO and the team, and I know that they're still very close to the team of Kashi and actually work on projects together up until today. One of the things I want to mention is also, again, thank you for mentioning that Kashi is driving a lot of the remittances between the regions in Sudan. After the investment announcement, 2 weeks later, the conflict broke out. So طبعا you can imagine, you'd think what happened, and maybe this was kind of like, force majeure and so on. But even after the conflict, we were having calls on a weekly basis for the integration of the technology, because as you know, and as I previously mentioned, Fawri is a strategic investor. So when we came to put that investment ticket, it was not just cash, but we also wanted to support on the technology transfer, on getting the integrations ready, supporting the team of Kashi to understand and price their services next to Fawri services, etc. So it was actually very mind-opening and resilience proving that the teams, of course, there were a lot of them that were displaced, etc. A lot of them came to Egypt. Some of them were already based in Egypt because Egypt has a lot of technology talents that work remote or offshored teams. So that being said, just as to keep it simple, exceptional foundation already by the Kashi team through Al-Souk. And until today, I think it was one of the most impactful investments, if you were to look at from Fawri, or at least from my professional experience, given that also Kashi is playing a big role in the current situation and the conflict happening in Sudan. To answer the general question about how these two ecosystems merge. أولاً اللغة، we speak the same language, we have proximity, not just cultural proximity, but historical proximity, brotherly proximity. So I think having mixed teams actually proves that when you have especially the technology teams, because they're the easiest to work remote from each other, this shows you that there is a consolidation component to this. The second thing would be also looking into potential, let's say, consolidation. So merging companies together, and this is not just looking at Fawri and Kashi, or looking at these, but also on a wider context with the African continent. We're looking at business models like, the B2B marketplaces like Maksab, for example, merging with a Kenyan dominant player like Wasoko. So these types of consolidations show you that the bridges are there. They're already built by our ancestors. However, it is up for us to really consolidate the narrative by using technology and mixing the teams. Specifically, if you have cultural proximity, is honestly something that we need to take note of. And I hope I don't want to take too long, but I'm happy to develop further points in the further questions.
Thank you so much, Karima, for this. I think with the other point, going from what basically you would look into how a Sudanese company would basically also be able to, with the right network and the right opportunity and the problem to tackle, able to raise big big investment rounds, even within Sudan context. And definitely a deal like Kashi, and then after that, it shed more light into Sudan as a country could invest in. And then, of course, the situation happened. I will move from here to Mohamed Eisa, and then take a more broader look into how these ecosystems work and investments happening. So as an IFC and as an entity that would look into global investment enabling markets, just a few statistics leading to my question. My question is about Sudan and Sudanese. But if we look into 2022, for example, there was like the African startups in general experienced like 250% year-on-year growth in terms of funding. 77% or nearly 80% of that VC deals went to 4 countries, like so Nigeria, Egypt, South Africa, and Kenya, which is making the rest of Africa underfunded, underdeveloped, less access to finance, and even more under conflict countries like Sudan, completely out of the list. So how you would look into that, and how IFC would look into bridging these gaps for access into other entrepreneurs that are underserved, that are under, as Ahmed said, very difficult situation. They need more time to go to the market. They need more riskier patient capital. What is the IFC role here, and how you think that within the Sudan specific current situation, what type of things were you basically able to do, or you think other people should do?
Sure, Ahmed. So first of all, the statistics you mentioned is actually even worse, because not only does Africa represent itself with basically 4 countries in terms of where the funding is going, even within these 4 countries, the dominant sector that's attracting most of the capital is fintech, which means that you don't have room for healthcare, education, climate, AI, software. So there is a structural issue in Africa that we are very focused on, because we don't want the 54 countries to be represented by just 4. So that in effect is a key problem that IFC is very focused on. So the good news is that we are not just relying on those 4 countries. So we have a couple of different tools, being a DFI, that help us invest in these frontier countries. So the first is basically we have a program that specifically invests in accelerators and incubators. So companies like Antler that really target the early stage seed investors. And we come in as anchor LP investors to sort of mobilize more capital to provide money for the ecosystem. And within that program, it specifically highlights and prioritizes the fragile countries. Secondly, we try to get the World Bank to also collaborate with us by providing funding to governments to also participate as an ecosystem participant in the fragile countries. And then we reach out to the other DFIs and private investors to make sure that they are also focusing on developing it. The second thing is, when we do make an investment in a fund or a startup in, say, the big 4 countries, we also try to highlight the need to expand into the frontier countries. So a Nigerian company could enter some of the more fragile countries, an Egyptian company can go into Ethiopia, Sudan, and so forth. So partly to make sure that we have the multiplier effect, that when we invest in the big 4 countries, it also has the secondary effect of expansion into the fragile countries. The other tool that we have is something called blended finance. So we try to de-risk our investment, not just for us, but other investors who co-invest with us in the frontier markets. Basically, this is a program that provides you capital protection. So 1x protection on your investment in equity in case things don't go wrong, to sort of de-risk your entry into the emerging market. The most important thing we also try to do is capacity building. So one of the things we try to do in events or sort of specific funding, because even if you have funding, say, for some of the fragile countries, there is a capacity gap that we have to address with the entrepreneurs as well as the fund managers. So helping them understand, as you mentioned, like you do in Sudan, in terms of how do you structure an investment deal? How do you approach investors? How do you write a business plan? How do you negotiate? What are the right terms in terms of the deal and what you accept and what you don't accept in terms? All of that has to be done so that you give these entrepreneurs a fair, equal footing when they approach investors. And this is some of the critical role that we do on the continent as well as other parts of the world. The good news, I would say, is because we get the chance to see what happens across all of emerging markets, in both advanced emerging markets as well as the fragile ones. The challenges that the typical Sudanese entrepreneur would face are not unique to the Sudanese entrepreneur. They're exactly the same thing that you would find in India, Bangladesh, Indonesia, Nigeria. It's the same. And I would even say further, the capacity and the capability of the typical Sudanese entrepreneur, I would say, gives them equal footing, if not a little bit more of an edge, because of how difficult it is in Sudan. So from day one, it's challenging on every front: infrastructure, regulatory, everything is a challenge. So when you develop a startup in Sudan or adjacent to Sudan, and you're successful, you are that much more resilient as a founder. So you get a chance to sort of really build something that is sustaining long term. And the final point is, if you look at the context of what's happening in Sudan, the startups that are in Sudan, or at least being formed by the Sudanese diaspora that have something related to Sudan, I think those are very important because they're already the rebuilding agents for the future Sudan. So what they're doing today matters because there will come a day where things go back to normal, we end the war. And the role that these startups are going to play is very pivotal because when an investor like us, or let's say an NGO, or even the World Bank comes in and says, we want to address healthcare in Africa, healthcare in Sudan, for example, going through an infrastructure that's completely broken and relying on the government is not going to work. You're going to rely on innovation. That is going to come from SMEs and startups. Why? Because they've learned how to do that from day one. They're faster, they're more agile. They can tap into global tech innovations that they can bring to Sudan. These are the most important participants in the rebuilding of Sudan. So I think it's very important to highlight their role in the ecosystem.
Thank you so much. From this point specifically about rebuilding, investing in, as you say, diaspora or people that now getting exposed and all that. And there's definitely lots of statistic on that in US alone. Like from 200 unicorns, 55% are coming from at least one immigrant second generation. But I will want to take a more context out of this, and I will want to ask you, Ahmed, on this. When within your work now with Blackbox, you specifically mention a specific persona of entrepreneurs. You call them a conflict-affected entrepreneurs. And if you are a conflict or forcibly displaced entrepreneur, if you are forcibly displaced, meaning you are not specifically within the same place you used to be. So you could be in another country, you could be in another place that you're not familiar with. So how you look into that in terms of Blackbox, the fund you're trying to raise for that, what type of characteristic you're looking for, and do you think a fit for Sudanese within other nationalities, of course, that also might be affected with similar conditions?
Yeah, absolutely. So first we look at it as to be, as you said, like there are immigrants in transition, like similar to the immigrants, where 65%, as you said, of unicorns in the United States are founded by immigrants, 65% of AI companies, more than 55% of unicorns. It's also expected 2 out of 3 of unicorns in Europe expected to be started by immigrants. But the forcibly displaced is not like they are still in transitions. They have the constraints. They still trying to figure out the legal. They still try to figure out access to the financial system. Some of the cases will be a problems. They have travel limitation in many of the cases where they land to. Maybe they cannot travel the country, or if they travel, they cannot come back easily to that country. What we try to do here is just to focus on those constraints and take them out of the shoulder of the founders, and we bury those and try to help them navigate through those challenges, as many other founders they already been able to pass on and take those as a cases and work with them, where the founders get to focus on their companies and tend to focus on their businesses and work with them. When you work with that settings, maybe as you said, there is a lot of investors here as well who are interested in investing. I would like advise like a couple of things that we follow in that process, that you need to, your due diligence or your work with the startups is not about the business itself, but also it's about the founders. And many times, often those founders navigate many challenges that cannot be predicted on a spreadsheet or cannot be written on just like a pitch deck. One of the founders yesterday, actually, I was talking to, because of course, space founders, and the thing I mentioned, like how you navigate through travel challenges and getting visas. I was like, I talked to many venture capitals around. Nobody asked me this question. Nobody understand my struggle. So local founders, they should also like look at it as the human being who's running those company and try to help them develop their company, not just the company itself. In that regard, we focus more on the local partnerships, and that's like very much advice for all the investors that doing it, because those people like 249 startups, they vet many of those startups and build a relationship with them through their local program for 3-4 months, and they have this kind of relationship. Taking it from them, it's also helped them grow their current model, co-investing in solutions, and also be flexible in like strategic exits. I know like people in GCC have been talked about liquidation problems when you come to for speed's place. That's a huge problems. It should be like, as I said, patient money, understand like how you can do the liquidation through secondary sales, maybe, or acquisition by a regional or a partnership driven exits that will be here and there, but you will be trying to use your network through that kind of solutions, and then maybe also understand it more and be beyond that, and use those capital, I would say like impact capital as a safety net. We don't look at the forcibly displaced as a humanitarian investment or as an impact investment. This is a purely a return investment, but there's some kind of blended financing. That's Mr. Mohamed talked about the IFC covering the cost. I wasn't aware about this program, so that will be a good opportunity for people maybe in this call, and investors did not know about it, to use that as an opportunity as well to capitalize on that and maybe help them like raise up their investment a little bit more to help the startups. And we see the characteristics are amazing. So many investors go with them, and then very great investors that we meet in the valley, when we talk to why you invest in the startup, they say the founders, and I think they are good. Yeah, Mohamed also talked about this with the Antler philosophy as well. And those people, they are really determined of success. They have no plan B, so they are really committed of they're doing. They face many challenges in every day. So when there is a challenge in their company, they take upon it and they do it. They are across market by nature, so they understand the local context, they understand the local market, and the way they go somewhere else. Let's say a Sudani is now currently working in Germany. They can build bridges between what's in MENA ecosystem and what's in Germany ecosystem, make them more like kind of ambassadors and understand those connections, and that's great opportunity than anyone else. And that's created this kind of fantastic returns opportunity if you understand their context as an investors, and you can help them and support them through the beginning, and you can optimize in a great return in the futures. And there's so many examples that will be there that we told you about, like a guy, Hassan, is a Syrian founder who left Syria when he was 17 and migrated to the UK as a refugees. Now they closed a 50 million deal at 11x AI based on Silicon Valley. There's so many other examples I can talk about. The Front Guard, I can talk about Multion Writers, and so many other startups that become a unicorn and become very active in the industry leaders in the very tough technologies and very tough ecosystem because of what we talked about, the characteristics. Just in a couple of seconds also for the founders who's listening, like how you can obtain those investment. Again, try to build your network with other co-founders. They navigated through some of the challenges, and there's a hacks in the market and the ecosystem. I know some of you might be struggling with the visas, or how can I open bank account because I'm a Sudani background. I was rejected to open bank account. We see that a lot with for example, the Syrians. Now there's like a few hacks on that. Like you can be able to, like, not just like through PayPal, Bloom tried to help it, check and save. It's a Syrian YC company, packed company. Syrian, but I mean, it's a Syrian co-founders. It's a UK company based in the UK. There's some stuff that you can do. Try to reduce the risk. Understand, okay, there's a risk there, so maybe I can do my holding company as a Delaware company, or maybe register it in Dubai, and try to be able to navigate through the challenges to reduce it on your investors, especially at the early stage of the investors. We'll probably have to give some incentives at the early on of the company to some of the angels to convince them. You probably have to do a lot of education to your angel investors than other people from your network, from their resources. But again, we see it's a return investment. It's very much impactful, and the LPs that we have, they're all private people who are looking for financial returns. Is not just like a humanitarian aid lens, I would say.
Thank you so much, Ahmed. Like these points in itself, we could have separate panels just for each one of them. Before I go to Karima, I would to shift a bit to talk about the investment perspective and doing deals together, and how Egypt had been very good in that, and also Mohamed Eisa. I want to redirect a question to Mohamed Elmalik or first. So Ahmed was speaking about these displaced founders. They are coming to new countries. They are very resilient, but at the same time, they lack networks. They lack access. They need to prove themselves from all over again and all that. On the other side, you see, not specifically Antler, but in general, you see lots of accelerators and funds and investors investing in more exposed, educated, highly US degrees or Europe degree type of programs, and then come back to their countries and they receive most of the funding. The question is how important you look into the exposure of the founder, and how founders that didn't have the same exposure to these, let's say, privileges, able to join programs like Antler and others. What type of extra work, let me say, that they need to do? Or maybe there is no extra work. Maybe you also accept different characteristic. I know the question might be a little bit tricky, but feel free just to share some thoughts on that as some actions that people could look into to be part of Antler or also any other programs.
Yeah, everyone needs to apply to Harvard University. And I think, look, at the end of the day, there are certain markers that on some level, it's a little bit lazy, right? On one hand, it's kind of a signal that you have met a specific threshold within what people view as access, intelligence, whatever it might be. But at the end of the day, so much of it is not captured in that. So I think like this is true that the people who've gone to the elite universities or have access to these networks tend to have an upper leg, and I think that is maybe flawed, right? So I think on the one hand, it's kind of our responsibility as folks who come from countries like Sudan, where the diaspora is quite big and maybe has quite a bit of access. It's kind of a little bit our responsibility to create a little bit of a network whereby we can give people a leg up when it comes to these kinds of situations where they want to build a company, where they want an introduction to an investor, where they want to gain access to a program or have an idea that they want to vet. So that's the first thing I'll say. I think like we need to take a little bit of that responsibility, because I don't think these metrics are the right ones to look at always. So that's the first thing I'll say. The second thing I'll say is we try our best at Antler, and I think probably other programs might do something similar, to try and obviate away or not necessarily focus on some of these headlines, right? So it's not exactly a blind audition, but we try our best to look at, again, we have conversations with founders who want to join the program. We want to learn a little bit more about who they are, their motivation, the challenges that they faced, and moments in their lives that have had to make them either become resilient, not stop at a specific obstacle to achieve a goal. And we try our best to focus on those things, right? So like we've done this both anecdotally, but also procedurally in how we think about applicants. Like we used to look at LinkedIn. Now I don't really care about your LinkedIn that much. We actually ask you to share a story. We have an AI-enabled kind of conversation with you where we try and glean some information about why you might be a great founder, why you're motivated to start a company today, and what positions you to actually tackle this problem. And almost none of that has anything to do with the degree that you achieved or the university that you attended. So we try and level the playing field to the extent that it's possible. And like, maybe a great example of that is our most successful company was founded by someone who was selling SIM cards on the street, right? This is a company called Eralo. I'm sure some of you have heard of it. eSIM company that allows you to kind of travel and have a SIM in every country that you go to, an eSIM, at a relatively affordable cost. And this was something that it feels intuitive, right? Like this should exist. It's tactically very difficult to achieve. And if we were looking just at degrees and just at like, have you worked at McKinsey? Then this is a founder that would have never made it into the Antler program. So we try our best to understand your context, where you come from, the challenges that you faced, and why you're uniquely positioned to build a company. So, we try and put those measures in place. Now, in terms of what founders can do, I think there's, in the context of Antler, I think I mentioned this in an answer to the first question you asked me, which is like, do you have a bias towards execution? Are you someone who acts and executes versus thinks and analyzes, right? And I think that's really the most important thing is like, have you tried to do something at any scale, right? It could be in your neighborhood. It could be for your specific city in your context. It could be, on a scale that doesn't feel super global, but shows to some degree that you're passionate about a space, passionate about a problem. So if you're someone who's an aspiring entrepreneur, I'd say, how can you be as scrappy as possible to solve a problem, to create something, to build something against the vision that you have? And as I say, the scale is almost secondary to that innate or almost like that ability to execute at all costs. So that would be my only piece of advice is like, if you have an idea, if you have a thought, if you want to build something, try, right? Like with whatever means you have at your disposal. And again, like that could be a phone. If you have a phone, there's a lot that you can do to either validate a problem, to reach a target audience, to create value around a specific problem that you want to solve. And even in Sudan, even in those moments where the infrastructure is kind of falling apart, but there's probably a way to hack the system to help either consumers achieve something like transferring money, right, or hailing a cab, but execute, I think is really the one piece of advice that I'd have. And then beyond that, try and tap into the networks. You can always, like, Ahmed is someone who's going to respond to you, so reach out to Ahmed. And like, if you want to build a company, like there's people that are willing to listen. So the easiest thing that you can do is reach out, try and learn, ask, how can I do X, Y, Z? I think everyone on this panel, and maybe the vast majority of investors, will give you 30 minutes of their time to tell you like, okay, this is actually interesting. Here's how I would approach it. And here's 3 people that I can introduce you to today, right? Like, this is possible if you take the first step. So there's an onus on us as investors, as folks in the diaspora, as folks who have been fortunate enough to have access to these networks, to open the door, leave the door open behind us, or open the door physically, right? And then there's an onus on entrepreneurs and aspiring founders to do what they can within their means to access these networks or tap the shoulder of the person that's next to them, and to some degree, like, try and begin to execute in a way that's super small.
Thank you so much, Mohammed. I will go to Karima and Mohamed Eisa to flip it a bit to look into the investors more and the LPs that would invest in funds that used to invest in companies. And just to reflect on Mohamed Elmalik comments, we have been talking like with also other Sudanese about within the chain of investments, one of might be, of course, there is more Sudanese founders need to also upskill their readiness for investment, but also we need to have more professionals in the venture capital industry that have links with Sudan, that able to connect with other networks of more investors. Now, coming back to you, Egypt is in general the second largest in terms of receiving funding in Africa after Nigeria. Already a more mature ecosystem, a couple of unicorns per se, and a growing aggressive entrepreneurial founders ecosystem. So I would say how entities like Plug and Play within the other funds and accelerators in Egypt, how they were able to attract more investments into them, and then they invest into the startups, but also how they were able to enable this environment that will enable more companies to come in, not only for Egyptians but also for non-Egyptians that might be interested to start businesses out of Egypt and then receiving investment, give it be Sudanese or Palestinians or Syrians or whoever the nationality was.
Thank you for your question. أولاً, very quickly, but because Mr. Mohamed Eisa actually tackled this perfectly about the divide of maybe having 4 countries driven by the same 3 get most of the VC, and I could not agree more. ولكن even if we look deep into these numbers, you will see that there's more exclusion of the general population in these markets. يعني again, Egypt, alhamdulillah, we have a good reputation to communicate our numbers. We've reached maybe $500 million a year, $600 million a year at a low performing period. But if you look into the deals, we're looking at maybe an anchor deal for 300 million, اللي هو واخد كل حاجة. And how many small $50,000 check has been done? But again, back to you, sir, we can clearly see that divide because it's driven by the usual suspects, the very privileged and very, very strong founders. بالعكس, and you don't get me wrong, they're incredible and they're the ones who are lifting up our ecosystem. So anything that happens to them will completely برضو bring us back down. ولكن البركة بقى for the LPs that are conscious on impact, conscious on inclusion, and I think the IFC has been anchoring a lot of the local funds, driving their second funds. For example, I'm talking about public investments that IFC did with Algebra Ventures, one of the original VCs that started small, and now with their IFC big investment, they're looking at a regional exposure, which allows these bridges to happen, يا أحمد. دي حاجة. The second thing is برضو about the sectors, and again, I understand, I personally have a big bias towards fintech. I believe fintech is really a commodity that will drive inclusion on supply chain, on B2B businesses وكل حاجة. However, I think definitely sectors like education tech, I will not talk about healthcare much because healthcare has its favorites. So a lot of people still invest in healthcare because of strategic growth, etc. But EdTech has been one of the most frowned upon sectors in the world, by the way. It's not just emerging markets. The VCs in the US don't want to touch it anymore. ليه? Because there's a global trend. The exits paths are very slow. A lot of big names have been kind of burnt from exits, etc. So it's a general sentiment that global VCs or general global sentiment is not really touching EdTech at the moment, or very likely. This should not be the case in emerging markets, يا جماعة. يعني it's definitely against all logic, because EdTech is something that you can monetize, that you can consolidate, that you can grow without looking at the pure global venture markets. We need capacity building, and maybe not calling it capacity building, but capacity pivoting to the fund managers, even the ones that are in the West, when they come and want to invest in emerging markets. We need to put skin in the game and revise our due diligence process, our legal DD, and the period of time we leave to founders to get their papers together. Yani, we are a global VC. I invest out of Egypt, but also on the continent, and I can assure you, it's a burden I have to carry every time I enter an investment committee, defending the regional aspects of the sectors, but also giving entrepreneurs the adequate amount of time when I get a yes from the investment committee for them to sort out their incorporations, for them to take time to either, if they're not incorporated in a jurisdiction that global American VCs are comfortable to enter, at least give them time instead of the 1 month that we give global founders. We need to look into our thesis, even just to give more time for the people to do the flip and the ownership of the holdco to the operational company, because this is how we create inclusion. Just wanted to touch base on these two things that Mr. Mohamed Eisa said, and I strongly double down on, but I also admit that it's our fault, us as enablers and investors. We should also adapt to the regions that give us all these greenfield opportunities. This is one thing. Just to go back on how we do it and how we can invest further into the region. I think again, understanding the data sets is very important. Understanding how the market is reacting to the ecosystem itself. So you mentioned Egypt being a mature ecosystem. Honestly, I agree, because we've been through the ups and downs. We've been through how the media locally can ruin an entire round that includes global investors. We've seen companies SPAC and also SPAC on US markets. We've seen companies like Fawri go public on EGX locally. So there is a lot of experience, and I think sharing this experience, again, it helps us between Egypt and Sudan, for example, of the culture, the language, the narrative is told in a way that is easy to create a story. And I feel that's what's missing for Africa to attract more global investors, is to consolidate the narrative, to look into the centers of excellence that we have. For example, West Africa, with the Francophone Africa having a unified currency, for example. Very few people know this from the Western, big capital markets, that they can tap into this, for example. And even we need, as Africans, to also lobby for mobility between our countries. I'm unable to make Egypt, let's say, a haven for scale-ups, not necessarily for a conflict country, let's say, founders that need refuge in Egypt, but general scale-ups from Nigeria to other countries. We have a problem finding visas for these founders to even come and enter the country. And it's not because they're not invited by the government or anything. We need to find very simple hacks that will at least get the top founders, the scale-up founders, to move into each other's markets, to understand each other's problems, so that we can consolidate properly and not leave it to those who have an American passport, a valid Schengen visa, to be the ones making these narratives happen. So for me, inclusion is everything. We are 120 million people in Egypt, and I believe it's a handful of, literally a pool that we can count on our fingers, that are driving these hundreds of millions of dollars. It's great. We want them to continue driving more and more investments. But until then, we need to work bottom up, not top down, to make it inclusive.
Thank you so much, Karima. We'll ask Mohamed Eisa one last question, and then we'll go to the attendees for the Q&As. Please feel free to drop your questions, and we'll try to answer a couple of them with what we have at the rest of the time. Mohamed, I think the last question on this would be, from Karima did mention that some companies bring in investment into Egypt. Ahmed talked about the difficulties that founders affected by conflicts, affected by other things receive. Mohamed Elmalik talked as well about these different founders coming into Antler in Riyadh and on other residency program. I think when we look into the importance of the local capital beside DFIs and others, how important is, especially in countries again like Sudan or other similar countries with less local capital participation in venture capital investments, give it be family offices from big private sector companies locally, although that they have the funds, but maybe this is a new world for them. Maybe the risk is different. Maybe the understanding is still they need more success stories to get into, or high net individual in general. I think how important is the local capital injection into these markets, and what these high net individuals and companies able to do, especially within this condition, give it be investing in Sudan or even investing in Sudanese-led businesses outside Sudan, in seed stage or Series A, Series B, or maybe even investing in already existing funds that these funds have the experience to invest in other smaller tech businesses and companies.
Yeah, so it's a short-term problem. So I still remember when venture capital first took off in the GCC, investors didn't understand the asset class. And so the first question you would often find when you speak to family offices or investors is when they think of investing in a startup, they think, okay, am I going to get dividends in a year? So their mentality was, I'm investing in what I'm used to, which was real estate. So their concept of startups was, I'm going to invest in a building, it gets completed, I'm going to get rental income, and in a year I'll get profit sharing. So a lot of it, number one, is education. When family offices or local investors in places like Sudan think about VC, it's a completely different asset class, which means that the investor has to be educated in terms of what is the expectation of return. By the way, when we invest in startups, whether it's in Africa or Indonesia, our story is to have an impact means you have to make a profit. You have to make returns. We don't do investments that don't generate returns because we think for sustainable impact, it has to be profit driven and returns driven. So, which means when you go to an investor, you have to articulate the story of how is this investor going to get a return on their capital that they've risked. So in places like Sudan, it may not mean I'm going to wait until my startup is sold. It may mean that there's a revenue share in terms of commercial agreements. The relationship has to be specific to help them get over the risk of investing in startups. So it cannot be just invest in me, I'll give you equity in my company, and then 7 years later, I might see an exit. That's going to be very difficult for them to understand. But unfortunately for Sudan, one of the things that the impact of the war, we could have had this ecosystem develop in a way where Kashi and Terhad and all these companies were going to be successful, raise Series A, raise Series B, and all of a sudden there will be a lot of focus and interest that, wait, there's a way to actually make money in these startups. That could have unlocked a lot of capital. And there were big Sudanese families who were thinking about investing in startups and did invest in startups. So I think we had a momentary setback because of what's been happening. But again, I would argue that the capability is there. The future of Sudan, when it gets rebuilt, will be rebuilt from day one in a very different way. One of the unfortunate consequences of the disaster in Sudan and the war and all the suffering, the infrastructure has been destroyed largely. So supply chains, manufacturing lines, healthcare, education today in Sudan basically doesn't exist. So there's going to be effectively a restart of the country from zero, and how you rebuild it will matter. That void, I think, is going to be filled with investors and startups, less so, I would say, in terms of waiting for the government to redo things in the old way. So we have a chance in the future to rebuild Sudan in a completely digital way and to sort of leapfrog some of the obstacles from the past. So Think of, for example, healthcare. So why wouldn't we want electronic health records from day one this time? And do everything on your mobile phone, and do telemedicine, and do all these things from day one. A very good example is a company we actually invested in Senegal last year. This was a company that is founded by an AI scientist who was in Silicon Valley, Senegalese. He wanted to go back to Senegal to actually address the issue of digitizing healthcare in Senegal using AI. And he's rebuilding healthcare from the ground up using AI, using technology and digitization. And today that company is doing well, not just in the main cities, but in even the rural cities, by thinking through all the local challenges of healthcare and rebuilding it from day one in a very digital way. And I think this is more telling the story about what is the opportunity in Sudan. It's a large TAM, untapped market, large youth demographics, natural resources, and a clean slate in terms of how to rebuild a lot of industries, supply chains, manufacturing lines, food distribution, climate, health, all these things have to be done from zero. So I'd say the time for us is now to support Sudanese entrepreneurs who are part of the diaspora. They may be in Silicon Valley, they may be in Egypt, they may be in Saudi, who are working on innovative ideas that, when the time comes, they can quickly pivot and shift those opportunities to Sudan and then help sort of rebuild the country in a positive way.
Thank you so much for this message as well at the end, and the importance of investing now, despite it sound crazy, but actually this is could be the right time to prepare for the next to come. As you mentioned, to disrupt the market, healthcare, education, etc. You start today, and then things improve. You're already in the market. You're already solving people problem, actual problem. And then investors will come in later, right? It could be angels that getting first, local investors second, and then regional ones after that. I will try to take some of the questions we start to receive, couple with the time we have, and then we conclude the panel. So there is a little bit heavy question. So from Lena, I will try to answer this live. I think this is addressed to Mohamed Eisa, but I think after that, anyone from the panelists feel free as well to add. Lena did mention that Mohamed Eisa highlighted that significant funding is directed towards fintech startups. Is this because venture funds prioritize fintech based on limited partners' preferences? My understanding is that general partners tailor their investment thesis to attract capital by aligning with what Western investors are familiar with. Are there instances where limited partner grant GPs the flexibility to explore new verticals outside the original thesis? If not, how can we break this cycle to channel funding into underfunded but high potential sector? So I think in short about the influence of limited partners in the GPs, given all this. So yeah, we'll go to you, Mohamed, for this answer.
So first of all, I think it starts with the fact that this is the largest unmet need. The largest problem in Africa today is solved by fintech, which is, commerce doesn't work without fintech. You need payment solution, you need payment rails, you need lending, you need access to working capital. And this is not just a story of Africa. In all of the emerging markets, the biggest sector is fintech, just because it drives so much of the economy in so many different ways. Okay, so that's the first thing. The second thing is there's two types of funds. There are sector-specific funds, which, for example, will only work on fintech or healthcare or whatever theme that they have chosen, and they've gotten investors to focus on that. But by and large, a lot of the VC funds we look at are generalists. So they approach the market from where are the best entrepreneurs, where's the best potential to generate a return. Remember, this is a game about generating returns for your investors. So the fact that they've allocated more of their capital to fintech is just a reflection of how big is the opportunity. Will I be able to make money in fintech relative to an investment in climate or software or any other industry? So a lot of the capital we're seeing today has gone into fintech, just because I think that the scale of the problem is so big. The challenge, of course, is because all the capital has gone there, it's a bit overvalued. So there's a bit of an issue of, are investors really long-term going to get return on investment? Because if every VC fund and accelerator funds goes into fintech, investing in the same companies, waiting for an exit, at high valuations, there's a bit of a risk. We try to counsel a lot of the VC funds we invest in to really diversify and try to develop the other sectors. We as IFC are also investors directly in startups. We don't just do funds. And there we are looking at some of the other sectors because I think it's very important. And the fact that they're not attracting a lot of capital is great because in that instance, when I'm investing directly in a startup, I'm looking for an opportunity to get ahead of the investors. I have competition coming, so I want to make sure I capture the best opportunities before everybody else. And again, going back to the example in Senegal, we did that investment very, very early. We went out of our typical comfort zone. We as IFC typically come in at the Series B, much later investors. In the case of Senegal, we came in at the pre-seed level because it was healthcare. We saw the opportunity. We wanted to get ahead of it. And now the company is doing very well. It will be able to attract. But just in a summary, it's not about whether the GPs or LPs have a bias. It's really a reflection of what is the market opportunity, and that's where the capital is going.
Thank you so much. There is lots of questions, so unfortunately we will not be able to take them all, but hopefully be able to respond to them within other panels. But I will take one question at least for each panelist. So I will merge two questions. There is a question by Mohamed Elmalik and another question by Uday. The main point is when you look into investing in, so Uday's point was when looking to attract investors to Sudan or similar context, I would direct this question to Ahmed Sufyan, to Sudan or similar context, especially in the context of fragile and high risk environment following the conflicts. Basically, what are the practical measures that can be implemented to attract such an investor to such a countries? And Umar's point was about someone Sudanese outside Sudan, he always faces an issue related to trust. If he want to work with someone on ground, supporting from outside or doing joint venture, or this is how I understood it, because as he said, you need to be there on ground in Sudan to make sure your business is going. So let's take these two in a perspective of basically highly risky type of countries. As an investor or as someone doing business there, what are the practical measures that founders could do maybe to de-risk that risks or these doubts that the investors might have? Ahmed?
Well, it's gonna be like it's hard to find one answer for all the startups. Like it's really different, depends on the startups. Like some of the common measures, it could be taken, as I said, maybe register the company elsewhere. That goes without saying. Like investors will not invest in hard jurisdictions. They want to go to places where they understand. So to maybe be able to do that, if the headquarters relocated somewhere else, maybe they allocated as the co-founders based in Cairo or based in Riyadh or Dubai, where the back office team is operating in Sudan, that still make it a little bit less riskier, have a blending approach in terms of the finance between returns focus and impact driven focus. And then just focus on more your story as a Sudani entrepreneur navigating challenges is your greatest asset, and that's resilience. Show the investors how this will be reflected on the success of the company, be able to fight to grow this company in a larger basis. Focus on the solution, even though working in Sudan, also was how the solution is shared challenge across the markets in the MENA region or in Sub-Saharan Africa, and how the solution is built, even it's tested locally, it's the opportunity for that to expand and go beyond that. Be bold yet practical, like actionable roadmap, clear vision on the market. Your investors draw this ambition with the investors and how this will be growing and working. And again, that would be like a way to do it. It's not an easy approach. You definitely want to find an investors with the understanding of the local market. Could be local, could be someone with the resources coming at the beginning and impact, but it's always what's the return expected on that business and how it's going to be an opportunity for them to invest. Because at the end of the day, they have also other opportunities locally or regionally or in different investment instruments they want to go through. So be able to do that and like try to like as a local community, as a local ecosystem, to build this kind of collaboration among themselves to better facilitate some of the resources. We like having a place where it's more like hub for the entrepreneurs, where you can meet, have access to the internet, access to electricity, where it could be more stable for you and your team to navigate and build the businesses. Have this kind of relationship for co-sales between some of the people. It's not about competing at this stage, but working together to grow the ecosystem together. I hope that will be an answer, and we deep dive on that maybe in the later conversations too.
Yes, thank you so much, Ahmed. Ahmed does have on the website as well different content in English and in Arabic that people, I think, can also learn. Is publicly also available on that. On this note, lots of studies and books as well about doing entrepreneurship and fragility. So I think this could worth to also read. I will take the next question to Karima, and this question by Muaz Makawi, basically asking, what is a good approach for an early stage US startup to enter the MENA market? Is it direct entry, partnership, or a phase strategy? This is how the question stopped. I leave it to you, Karima. Of course, MENA is very big. Yeah, but maybe a general best practice.
Definitely, I'll answer you very promptly. Honestly, I think partnerships, collaborations, know this market very well. So one of the things that we like to do, not wearing the VC hat of plug and play, but wearing the program hat. For example, for Egypt, we've been anchoring scale-ups from South Africa, from Dubai, from other markets to come and explore the market. We give them office space as long as they commit to come in person and meet our partners and do like ecosystem tours. So we can support definitely on this, but collaboration and strategic partnerships pre-entry is very good unless you are very well capitalized and you are confident that you can dominate that space specifically because your technology is superior, because your execution team is also global but also has local understanding of the market. And if I can just bordo go, because this is like, honestly, I think it's attainable, and if you need anything, please feel free to look at Plug and Play Africa's or even my personal LinkedIn. You can always connect with me, and I'll help you the best way I can. But one thing I just really I saw one of the comments, and it's a question that like I see it a lot, and it's not just for Sudan, it's for Upper Egypt, it's for the general population for inclusion, is that SMEs and non-hyper tech businesses are generally what we build, and this is not what global VCs are looking at, which is completely true. However, there is a shift now and understanding, Bordo, that technology is still attainable. And just look at where, let's say, the most, like the locations with the most developers, for example, in our region. You have Gaza, you have Upper Egypt, you have a lot of places that are actually within hardships because tech speaks the language of borderless. Of course, a lot of people in conflict zones don't have the internet, but the developers have been making some money freelancing, maybe even getting paid in Bitcoin or something crypto, so that they cannot get the remittances in the country. But a lot of people think tech is not really attainable. As long as you have a community to build together, you can make somewhat a tech-based early stage business. Think about the Lebanese businesses, for example, or the Lebanese, let's say, venture space. And I'm not comparing at all the hardships between what's going on now to Lebanon, not even like generally, but Lebanon has had a very unique track record of building global tech products by Lebanese for the world. And they've done it in such a subtle way. You've seen companies like Enremi and they are contributing back to the Lebanese community. You have a lot of companies, I'm not sure if it's Tamara or Tamatim, but one of these companies that are like bred from the Levant region. They made global products just because they put it in their head as a country that is not great for ease of doing business. This is what we want to do. We want to build tech products for global markets, and that's how you have VCs like MEVP that invest heavily in Lebanese founders are making a killing, because the Lebanese founders have been building out of hardships for global markets. So hopefully we can also learn from these guys as well, because I think their model was spot on. A 4 million people country, but the diaspora is really putting back a lot of work, and they're building for global markets.
Thank you so much, Karim, for that. And our last question, because sorry for the others that put other questions, but because of the time, the last question is Mohamed Elmalik. There was a question on what are the key signals or milestones that indicate it's the right time for a startup to begin fundraising? And I would like to also, add another flavor to it, that you can answer it from a perspective of if it's a company just working alone, or a company that would go through Antler program. So how the path would look like for both, because I do feel like there is a lot of opportunity for Antler for founders, right, to start through it. So yeah, I appreciate if you can answer that question from these two angles.
Yeah, for sure. So I think it's generally a good question, and one that's maybe doesn't have one blanket answer. I think it's super dependent on the market you're after, the business model, the problem that you're solving. But I think the core element is, are you building something that people want, right, or need? And the key metrics that we look at that maybe paint that picture are, are you seeing traction, right? So if you're building a consumer-focused app, are you seeing users that are actually active on your application? Are they using it on a daily basis? Do you have people who are coming back, right? So like if it's something that's more of a marketplace or an e-commerce play, are you seeing return visitors? Is there, a healthy kind of retention curve within the first few batches of users that you've onboarded? And so that's kind of like on the consumer side. On the business to business side, it's a bit tougher, right? Sales cycles tend to be a bit longer. The product that you build might need to be integrated. There might be a little bit more complexity around how you actually onboard some of these customers, and you might need cash to do that, right? Just for integrations, sometimes even for licenses, right? So on that front, it's like, okay, we heavily emphasize speaking to customers, right? So have you gotten intent from potential clients that they're interested in what you want? Are there comparable products that they're already paying for that your product can do something better? Are there signals in the market that there's appetite for the general problem that you're solving and building a product in that space? Obviously, if you're building something completely new and radical, it might be hard to find comps in the market. So then it's really a question of, can you get some intent from potential buyers? And then can you tell a story that's compelling and logical, right, around why this company will grow and why now is the right time to build a product in that space? So that's maybe like the very, very broad answer. To be a bit more specific, I think, for us at Antler, we look at, as I said, founders first. It's a team game. So if you're an individual founder looking for a co-founder, that's amazing for us. If you're an individual founder with an idea, that's fantastic. If you're an individual founder with a prototype, MVP, some early validation, even better. But all of those are totally acceptable for us. If you're an early stage team, obviously, like, have you done any actual legwork to validate that the problem that you want to solve is real? If you haven't, and you've been thinking about it for a long time, that's usually a flag for us. Yellow, orange, potentially red flag. But if you're a team that just formed and you have an idea, that's also interesting to us. So like Antler is very flexible in terms of the stage, right? So if anything from, I just want to build a company because I'm hungry and I don't have an idea, to we're actually a fully formed team with a working MVP and some initial customers, all of that is fantastic. Now, usually, if you want to raise a more substantial kind of pre-seed or seed round, there tends to be a bit more focus on the numbers and the traction that you have. Again, like if you're building a financial application or something that requires licensing and you need $400,000 in your bank account to even secure the lending license or whatever it is that you're building. Okay, cool. What can you do to validate that this product should exist in lieu of a license, right? So like a lot of the tech-enabled fintech players start off as a product only. So you find the potential buyer, the lender or seller, and you act as an intermediary. There aren't too many licenses that are required to act as a tech-enabling player, as a niche to start or a beachhead to start, and then you go and acquire the license once you've validated that there's actual demand there. So that's also an interesting thing. So like, can you find customers, build traction, build a bit of a product, and then it's a story, right? So like it's the age-old 4 T's: team, TAM, traction, and timing. So why now? Why are you the right team to build this? Have you validated that people actually want to use this? And is there a big market for this? So I hope that kind of gives a well-rounded perspective. But if you want to build a company, apply to Antler. Shameless plug.
And we are discussing something, hopefully, with Mohamed Elmalik to do a session as well, masterclass on investment readiness. So I think that I would invite everyone for that. Let's see the time to have that. No, at the end, I apologize for taking 6 minutes on top of the time, but just to conclude, I would like to thank all the panelists and maybe just leaving you with 1 minute or less to share anything. It could be advice, it could be a reflection, it could be a story, anything you want to conclude with, please, before we wrap up.
Okay, so Ahmed, I do want to actually point out one thing, and we get a chance, in my job, it's a privilege to see a lot of innovation and entrepreneurs across all of the emerging markets. But I do want to just share one quick story. There's something called the AI Institute in Africa. It's basically an institute that's in Rwanda and Senegal that trains data scientists, specifically Africans, with sort of top-level AI data analysis. And the people who are selected and graduate have job opportunities globally with the global AI companies. I had a chance to go visit the program, and I thought there was one important feedback that I want to share with you. So they only recruit or accept 1% of African applicants, and this is a program only for Africans. And so you have the top people in all the universities across all of Africa apply to it, and they select people from Nigeria, from Egypt, from Sudan, for a lot of different countries. And one of the feedbacks that I received was there were 2 participants from University of Khartoum who had applied. And the person who told me this didn't know I was Sudanese at the time, but they told me that the capabilities of the students at the University of Khartoum was as good as the top universities in Nigeria, Egypt, South Africa, across the continent. Even this, with all the challenges in Sudan and education, the capabilities of Sudanese is well recognized, even though they didn't necessarily get trained from day one in the UK or the US. And I say that because I think there's an assumption here that unless you've been trained in the West, you don't have the capabilities to start companies or solve problems, and that's not the case. So I just want to leave that with a lot of the people who are thinking about starting companies. I think the only gap that really we need to fill is not on the technical side. It's changing the mindset to understand that we can accomplish things, because culturally as Sudanese, we're very conservative and we don't necessarily think big and take risks. And changing the mindset of risk taking is where I think we can have the biggest impact.
Yes. Before going to the next one, you might be referring to AIMS. Yeah.
That's correct.
Okay. Yeah, I just posted the link as well for everyone to check that out. Yeah, Ahmed, and then maybe Karima and Mohamed. Any final thoughts or notes? Opportunities, feel free to as well.
Yeah, absolutely. Well, just as already been said, there's very much like resilience here, and you guys are the pioneer in the startup ecosystem. The challenge you face today is going to be what shaping this ecosystem was going to be shaping you. You are the innovative leader to try to find the challenges and the problems and make a solution out of it. Yeah, I was very much amazed 10 years ago, so I can imagine what is the situation is today. You still like as the founders in Sudan inspire many others. Sadly, there's not a lot of media spotlights on what's going on in Sudan and the startup ecosystem in general, and the startup ecosystem in particular, even in the Arab world. So that's still like also challenge. So people speak up, even if not in the nature, but this is in the best interest of the startup ecosystem in general. And yeah, build like for impact, build for the region, for the global, and the whole world is watching.
I'll go through. أولا again يعني nothing to add after our fellow panelists يعني brilliantly يعني mentioned everything. But again, I think technology is a blessing, and I'm not surprised خالص in the University of Khartoum is getting calibers as big عشان again learning the technicalities nowadays in today's time, in today's chat GPT, online learning, it's a blessing. Alhamdulillah, I think the resilience is there culturally برضو. يعني I can't agree more about maybe building confidence, boosting, and I've seen this with women founders across multiple regions, يعني how this also affects how they present themselves in grabbing funds. Technology is a blessing, but community and bridges are يعني more than a blessing. يعني they're essential to this. I'm honored والله إني بخاطبكم كلكم. Thank you for hosting me.
Thank you, Ahmed, Karima. Mohamed,
Yeah,
any final words?
sure. I'll just say one thing. I think there's a question about post-war investment. Is there going to be an opportunity for investors to come in and like think about this as a venture scale thing versus quick returns, long-term returns, etc. And I think Umar, I know you answered in the chat, Mohammed. I mean, I think in short, there's a story to be told, right? Like the first thing that you get asked by a VC is what's the problem that you're solving? And I think that question is already answered in the case of if you're building something for post-war Sudan, infrastructure layer or above, the question around problem is already answered. Then there's a question about timing that's probably already answered as well. So you in some ways it's kind of a blessing that you have a ton of opportunity to build something from the ground up. And then I think it's a question of story, right? Like what is the most compelling way that you can convey the story, that the right way to tackle these problems is through interesting, innovative, tech-enabled approaches. I think that's also that's really where the challenge lies. Patient capital exists. I do believe that. I think even US unicorns, founding to exit, it's not 5 years, it's not 7 years, although that's the number that's touted. It can be 10, 11, 12, 15, 18 years, right? Even in the case of some of the biggest players, right? So I think if the potential is there, the ability is there, which I believe it is, it's a question of cracking how do we actually implement this for problems that are inevitably going to be very painful and big. So it's bleak at the moment, but I do believe that there's exciting opportunities ahead.
Thank you. And thank you all for all the panelists for your time and for all the people that attended with us today. Thank you again and have a great evening and morning for the morning people as well. Thank you.
Bye-bye.
Bye-bye.